inducement theory. Inducement theory. It's very, very important for you to understand some of these basic concepts because it's going to help you to take decision as far as your trading is concerned. If that's the case, then what do we call inducement? All right, before we go to the theory, what do you call inducement? When somebody is being induced to do something, right? Maybe you want to, your direction should be from Lagos to Los Angeles, okay, but you have been, you have been induced in one way or the other to go from Lagos to London before you go to Los Angeles. Can you see? You are supposed to go to Lagos to Los Angeles. They have been induced to go Lagos to London before you now go to Los Angeles. This is inducement. Okay, when you now relate it to trading, what do you mean? What it means is that overall direction of a pair is a sell. For instance, you see that this showed off from this level to this level. Okay, let me make it very neat. I can see some people are noisy. I have to mute all. Yeah. Okay. All right. So what I'm saying is very simple. You know that if you have a move as you have here, okay, before you can sell this market, you want it to come to premium. That always called premium and discount, okay? You want it to come to premium between 62 to 79. But in actual sense, it should be between 50 to 79. But I like 62. Okay, because the reason why I like 52 is because most of the time, inducement happen at 50. This is where most of the traders are being rigged out of the market, this level. And if you look at it, the level will be close to 50%, or if not 50%. Can you see where you are being rigged out? Can you see 50%, 50%? So why do we now call this level an inducement level? The reason why we call it inducement level is that this is the premium price right here. This is where we want to sell, comfortable place to sell. But do you know what? At this level, down. Market got to this level, down. Market got to this level, down. Do you understand? Do you know how many accounts will have been blown as a result? Okay, you are being induced to sell when in actual sense, the market still want to buy. This level, you are being induced to sell. In actual sense, the market want to buy. The same way here, if you can be induced here, in actual sense, the market want to buy. Because this is the premium level. The market need to come over here. Okay, but instead of the market to come straight to that place, it's playing prank. And what is the prank? The prank is to force you to sell, to say this is support and resistance. Okay, this is where resistance. Boom. I need to sell at resistance. Yes. That's why here, people that are selling here, they will be murdered in this market. All right. Some people will say, they are trend line expert. Boom. Can you see? Boom. Here they are selling. Selling. Can you see? They are rigged out of the market. So the inducement theory will give you an insight into the right place, the right level, and the right time to get into the market. For instance, I will be the last trader standing anywhere in the world to sell GBP, JPY at this level. Why? Everybody all over the world is seeing this level. And so, if all of us are seeing it as resistance, then the level is not secret again. I want to sell or buy in a secret level, not in an open level. So that's why you are giving small people here as a sell and everybody jump up. Whereas market is giving you a story. What is the story? Can you see this perfect trend line? That perfect trend line is showing you that in one way or the other, market is still coming down to break it. Liquidity, liquidity, resting below. Do you get now? But right now, this market cannot find enough volume at equal high level to come and take all this liquidity and break it to the downside. It cannot. So what the market need to do right now is either it goes up from this level to tap order here and come down, or it comes down back to demand, take order there, and then go up. Simple. So if you want to trade inducement very well, there are no two way about it. What you just do is this. Since you know that market is rejecting at inducement level, when the rejection is correctively coming back to discount, can you see? If you take a fib of this one, you can see that the market has come to where? Discount. You can buy there to target where? To target breaking this level to this level as your TP. Okay, but if you get to the inducement level, you have to watch out in case there may be another rejection. Just as I had in my trade, I got in here, this was my TP after this rejection. So if you rejected from inducement back to discount, where is the discount? Take a fib of this one. Okay, where is 62 to 78? Look at it here. That's another buy. Boom, to the upside. We caught this sell yesterday in the night. We don't trade the share session. You have this buy again. So what are we supposed to do? Are we supposed to sell at the current level because the market is in resistance? No, that is inducement. And if you look at it, if you don't want to deceive yourself, you will see that every buy here is more powerful than the sell. Every buy is more powerful than the sell. Every buy more powerful than the sell. That's to tell you that the sell is not it's a fake one. It's a fake one. You are just being induced. All right, you are just being induced to sell, whereas the market still want to buy, because this is not the right level that we want this pair to move to the downside. This is not the right level, because this is just inducement level, fake. These are fake level. These are level that is used to wipe account. Okay, because somebody is going to sell here, put stop loss here, and as soon as this market gets to this demand zone, it's going to make a move to the upside. No valid sell will be entertained until we move to this upside. This is where we'll find enough volume that we'll be able to do what? That will be able to come and break this liquidity down here. Is that okay now? So now that is what is called inducement. But when you now mention inducement theory, how do we approach it? How do we approach it if we want to trade? We really want to trade inducement. Okay, it's simple. What you do is that as we have identified inducement level where market is rejecting from, all you need to do is that each time it's rejecting and is correcting against an impulse, this is a strong impulse. If you agree with me, this is correction. So if it comes to, that's the theory, the first one, if you come to 78, 62 to 79%, look for buy opportunity back to the inducement. Okay, if this rejects, look at this. Look at this. As it rejected again, look for your fib back to discount, buy again. Now, I'm giving you another one. If this one rejected like this, comes to discount, take the fib of this level, come back to discount. Where's discount? Right here. Discount, my discount is between 62 to 79% retracement. Once it comes here, guys, look for correctively. I'm not saying impulsively, correctively. Look for your buy setup right here. Where's your target? You have to target that level that we marked here. This is where we know it's a comfortable place for GJ to fall. Okay, that is the rule inducement theory 1. Okay, the first one. The second theory is simple. After you have succeeded in breaking this inducement level to the upside, this is the right place for you to start selling. Okay, and then because after taking this level, this market is not going to find enough momentum to the upside. Why? Because there are a lot of order here, sell order that it has peaked, so it's ready to fall. So you must wait in lower time frame to see break of structure correction before you get in for a sell. Okay, so this is how you use inducement to help to model all strategy. Okay, you use it to kill all strategies. Look at this. For people that trade trend line, they say, oh, it has broken the trend line. Now they are looking for buy. They are going to be disappointed when their buy gets to this level. You will now see the sell. Okay, and then for people that trade support and resistance, oh, they say break of support, turn resistance, break of support, turn resistance. Okay, that's it. That's how they trade it. Okay, resistance, sell, resistance, sell. They will be surprised. They will see this. All the positions they have accumulated. Okay, how many positions? 1, 2, 3, 4. 4 positions, putting their stop loss right here. Can you see the market has come to smash the stop loss and they are all gone? Okay, this is how you use inducement, you know, to kill all strategies. Kill them when they are out of the market. That is when you will now get it. Is that okay now? So let's look for another example of inducement and how we apply it. Okay, let's go to let's go to this pair, Euro GBP. All right, if you look at Euro GBP right now, you see this trend line here. Okay, you see this level, you see corrective structure here. Below it, okay, lies a level. Okay, lies a level, and if you look at on top here, you can see that market is keep rejecting. Okay, didn't get here, keep rejecting, keep rejecting, keep rejecting. That is already telling me that this is what? This is an inducement level. Inducement level. Okay, and if I see inducement level here, look at this level. You see why this push is not able to break structure? The reason why it's not able to break structure, okay, the reason why it's not able to break structure is because it's coming from level of equal low. If this trend here has broken this low, this push will have been terrible. Okay, but it did not break it. So if a market is coming from equal low and equal high, it means that it has not gathered enough liquidity that lies below in order for it to push harder. So such move will not be a serious move. Okay, so coming back to Euro GBP, you will see that what we are expecting is that we have liquidity down here, we have inducement up here. So inducement here is inducing people to sell, whereas they know that the sell is going nowhere. Inducing people to sell, sell, sell. Okay, a time will come, that sell will come to pick enough order here and break it to the upside. That's what we are talking about. Break it to the upside. You can see my arrow. and until you have it to this other side, that you cannot look for trade opportunity to the downside. Can you get it now? So, and why do we think this downside will come? Because we have area of double bottom here. This double bottom here will be taken. It's as simple as that. It's going to be taken, but it cannot just come straight. So people that teach structure and they say structure is higher high, higher low, higher high, higher low, I laugh. Structure is far more than that. It's far more than that. What you need to know and understand about structure is what you see that I'm discussing with you right here. Okay? Inducement. All right? And look at this here. If you look at this, what do you see here? You know, when I teach you, when I teach you or pledge to you that I'm going to teach you something, although these are things that are meant for my mentorship, you know, class, but I teach you the elementary part of it. Okay, because I have some of my students right on this call. Okay, I'm not going to teach them what they pay for. I'm not going to teach them everything here. Can you see inducement theory? Can you see it in operation here? All this level here and the inducement level. Okay, so now inducement. I told you when this inducement corrects itself back to discounted zone, which is between 60 to 79, what did I say you should do? Buy it to the upside. If you get to the inducement level and it's rejecting again, like this one, can you see? This one is rejecting again. So what do? Take the fib of the previous move. It's simple now. Take the fib, get discount right here. Take your trade. Can you see? Now, look at another inducement. Corrected, induced. Sorry, rejected from inducement again. What do I say you should do? Take a fib, 78 to 62 to 78. Take your trade. Simple. Can you see? And now, when you take your trade here, where do I say it should be your target? Allow these tops to be smashed. And can you see? It has been smashed. That is liquidity grab. It will smash it and take order. Okay. And after it took order, what do you notice? Boom, to the downside, break structure. Okay. Break structure. Can you see? That's how you look at the market. Right now, if you break structure here, you take this fib, you expect this market to come to where? To come to premium. Where is premium? Between 79, 62 to 79. Okay, that's where you want this market to come. And now let me analyze with you what happened. Okay, before the premium level, what do you notice? I remember I gave you this markup that we are going to pass this level, inducement level, before we sell. Okay, and look at it here. There's a small supply here, and on it, you see what? Inducement. It doesn't come to discount. Otherwise, we'll have bought it from here. Okay, inducement. It didn't come to right fib level. Inducement to take all this. Now, right here, you can buy because it's appropriately equal to fib level. But okay, I remember I told you something. Okay, not you, it was in my course, the course I'm recording right now. Okay, what I discussed there is that if you have a push here and you have the correction is not up to 50% and you have another push, if you want to take a fib to know the retracement, I beg you in the name of God, take this as one move. They are not two moves that you take impulse from here to here, you take another one from here to here. No, In as much as this did not get to 50%, this 1, 2, and 3 is a single impulse. Okay, it's a single impulse. So apply that to this particular level. Okay, this one, this move that goes up, this correction did not get to half. This move goes up, the correction does not get to half. This move goes up, it is now that we have the correction. So right here, you can buy to the upside to target this high. But in as much as this high made a low, but this lower high made a lower low, but this higher low did not make a higher high. So it's a sign that we are what? We are reversing. Somebody is confused with what I'm saying. When you have low, higher low, lower low, okay, lower high. In as much as this low here, okay, this low here did not break this top, you are still in a what? In a downtrend. That's all. Until that level is broken before you can say you are no longer in a downtrend. So that is how to understand inducement. And what do you notice? As soon as this inducement level is taken to the upside, as soon as it is broken like this to the upside, what happens? You have a move down. That's all. So every inducement must be taken to the upside or to the downside before you buy or sell. Is that okay now? That's how it is. Do we have any question relating to inducements? So go and practice them. Go and practice them. And anytime inducement is not taken, either to the upside or to the downside, your setup will not move. It's going to stay in the same place or even give you a stop loss. Why? Because your inducement has not been taken. So it will be good if you can spend time understanding this concept. Spend time to understand it, and the more you understand it, the better it will be. All right. Now, look at this. I'm just showing you something. Can you see this reaction after this move down? See this move down? You see reaction? You see move down. Before these ones form, I already knew that this area level was going to be potential what? Potential inducement level. And then if I must sell, and why must it be that level? If you take a fib of this impulse right here, you discover something very significant. It is inducement is happening below 50. If inducement is happening below 50, just know that the market just know that level is a real inducement level, because the market will flip to the upside to go and take order. And what do you notice here, guys? The market flipped to the upside. This is premium. It has taken order from premium and it has to continue to sell to the downside. So if you sell GU, you should be ready to get involved in the sell, because opportunity is about to be provided. Okay, because right now in GU, we have smashed the inducement level, number one. Number two, let's check if we are right now at premium. Yes, we are right now at premium. Number three, you need to see break of market structure in lower time frame. Okay, break of market structure in the lower time frame like this. Boom, correction. Boom, break market structure. How can we enter? Now, inducement is already created. Inducement is already created. Double bottom is created. Okay, so now what do you do? What you do is simple. You need this inducement to be taken. Why does it need to be taken? This move has to come to premium. premium price. Can you see how we do it now? Until we get to that level before you now switch to 1 minute time frame and you now try to see break of structure. Boom. Can you see? So this is the analysis on GU. Okay. I also have analysis on GCAD and GJ. All right. GCAD. Okay. I've done the top-down analysis, but on this time frame right here, all we want to see is for this correction to come back to where? Premium. Where is it now? It is right at inducement. Inducement. Look at how many how many times people have been deceived to sell here. Sell, 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 sell. Why this? You have been telling people to sell here, then why do you break where they put their stop loss? Why do you break it? That is the power of inducement. And what did I tell you as, as the theory of inducement? I said, when a market rejects from inducement, okay, and comes back to where? Discount, buy. That's what I use this morning, okay? Look at it here. Impulse. This move is retracing back from the top, from price to inducement. So right here is your trade. Can you see? Doing fantastically well. Okay. So now, it is expected that as soon as this level is taken, the market can reverse at any point. But I love to see this gentleman coming to 62 to 79. Okay, when the market gets there, I switch on to my lower time frame and look for breakout structure and get in. Is that okay, guys? So that's how to use, what do you call it, inducement to make your trade setup. Okay, so you can study more about it. All right, so do you have any question? Do we have any question? If you have question, you can unmute yourself and ask your question. We have 10 minutes to go. Becky, what's your question? Becky, talk to me.
Sir, good afternoon, sir.
Okay,
Solomon, can you check Euro USD for me?
Okay.
Euro USD. Yes, sir.
Euro USD. Okay. 4 hours. We are actually in the zone where we need to sell. Before you look at Euro USD, you have to check DXY. You see, DXY is at any moment from now, it's going to start a move to the upside. Why? It's a corrective structure. Boom, boom. That's all. At any point here, guys, DXY should start a move to the upside. Okay. The same thing is applicable to euro dollar. At every point here, euro dollar should start a move to the upside because we have this level, this zone. We want to take it out. It has been taken out, and it even gives us extra by taking this level out. Okay, even this level is taken out. It is doing well, honestly. It's pushing to the upside, giving us high probability to sell. All right, so that is 4 hours time frame, and you can see that it has really tapped that area, but you shouldn't be involved except you have you have this happen, because you can have this move happen and the market will still visit the top. So you need to see when institutions get involved. You should not get involved in choppy market. Okay, as this one happen, break here, it can still come break the top. But anyone that breaks structure, pay attention to it. Any move that breaks structure, pay attention to it. Is that okay? But for now, it is only when you have this break of structure that you can be looking for correction, pay attention to liquidity, pay attention to inducement, and then over here, you look for sell opportunity to the downside. Simple. Is that okay now? That's what I see with Euro USD. Any other question? Any other question? I was calling Becky. It's regular. That's why I'm calling her specifically. She's a regular attendee of Wednesday Live. Becky, I give you opportunity to ask your question. Whether it's Becky or the husband, I don't want to know. This Becky, whether it's a man or woman, I don't know the person. But I know you are always very regular, and we don't know you, but you are regular. Ask your question. And I also give opportunity to Doyin, Madam Doyin, to ask question too. It's all female affair today. See, this my sister. Vera is here today to come and learn inducement. Yes, Vera, I promise you a session. Okay, anytime you have chance, let me know. I'm going to give you free 1 hour session. Free. Vera, where is Vera? Unmute yourself. Talk to me.
Thank you, sir.
Yes, sir. I'm giving you a 1 hour free session on 21st century development in forex market. Okay, it's going to wow you. Yes. All right.
Thank you, sir.
Yeah, no problem. Becky. Okay, Becky is not ready to talk to us. Lawa, where's Lawa? Yes, I'm giving opportunity to the female folks today. They are our mother. They care for us. Somebody say my cheeks are coming out because my wife is giving me good food. Talk to me. Hannah Lawa, talk to me. If you are not ready to talk, the smart woman, the smart one, Madam Doyin, talk to me. You have any question?
No,
yes.
Good afternoon. I'm still very, don't let me use the word confused. I'm
Okay.
just trying to cement everything in my head. I don't understand it.
You don't understand you don't understand inducement.
Yes, I'm just trying to.
You need to understand it too. That inducement, all right. I promise you this session will be over in the next 4 minutes. I'm going to send you another link and talk more about it in maybe another 10 or 15 minutes. If you don't understand this inducement, you will be rigged out of the market many more times. Let me tell you something. You can use Elliott wave theory as a forecasting tool. You can use liquidity and inducement as a forecasting tool. It will tell you exactly. You can see that if I want to use Elliott wave theory, easily you see me, I've analyzed my market based on Elliott wave theory and I know where the market is going. If I want to use inducement and liquidity, very easy for me. Okay, now I can tell you with some measure of authority that if this market does not break to this upside, if it's selling from here, that selling is going to, this is the bus stop of that selling. This is the bus stop. From here, I look for buy until I smack this level. If I don't smack this level to the upside, this market will not find enough volume to sell. Do you understand now? So when I say level of inducement, I mean level that are equal. You see, market come here is selling, market come here is selling, market come here is selling. But as is selling, All right. Did it sell so much before it flipped to the upside back? That shows that the selling here is fake, selling fake, selling fake, selling fake. That's why they call it inducement. You are being induced to sell, whereas the market still want to climb. That's what I'm saying. You are being induced to sell again, whereas it's a lie. The market has not gotten to the level. And me and you know that at this level at this equal level, the market cannot sell. The market cannot sell very hard because why? Liquidity is resting on top here. That's where liquidity is. It's not here. It's not here. People don't place stop loss exactly where they sold. They place stop loss above. And people that also think that this one will continue to fly to the moon, where did they put their buy stop? Right here. Buy stop right here. So you can see the stop loss for sell and the buy stop for buy. They lie in the same place. That is why we call it levels of liquidity. So this level is very, very liquid. So market must come there. If market don't come there, if it's selling here, even if you break this level, it's going to come back there. That's what I'm telling you. It's going to come back there because that is the level where you have enough liquidity. And for bank to sell, they need somebody that want to buy. So those are the buy stop people. Buy stop people. They want to buy stop. So their buy stop will be used as what? As liquidity for their own sell. That's what we are saying. Right? So when you get more advanced, you now see that this is all this trend line you see here is good. Market is going to smash it to the downside. It will smash it. Okay. But before it smash it, it must come up here. Take order here. Ferociously break down. That's how it is. I think I've explained better now.
Yes, sir.
Okay,
Yes,
so
sir.
we don't need to come back. We don't need to come back now, Abi.
Yes, sir.
So see you next time in the absence of no question. Sir, this one that men do not stand chance today. I wish that you help look at NZD USD. Okay, I'm going to analyze NZD USD and send it to the chat. Okay, Mr. Johnson. Time is not on our side again. I'm going to analyze NZD USD and send it to the chat. All right.
All right, sir.
Okay.
All right.
Thank you very much. All right. Bye-bye. I hope you guys gain value.
A whole lot, sir.
All right.
Very
All
much.
right. All right. Thank you. Bye-bye.
Thank you too.
Yeah.
All right.
Thank you.
Yeah.